Nasty, bro. What a good trade. What a good trade.
Good morning, guys. I am so sorry. I ended up DJing last night and had wrong uh, the wrong link set up for OBS. So I was streaming on my DJ channel and not the Spark and Trade channel. So big apologies for that. I'm up now. I had to reboot because something happened, and that's how I actually figured out that I was on the wrong thing. Think or swim. Sorry about that. Wow, big day already. We took longs on ES out the open because we were anticipating the shorts on NQ. So my first trade was an NQ short. I got stopped out of that on the bull run to the upside, decided to take some of that bull run on ES, got out at the top, and then the market just started doing what we should anticipate it to do under the condition that I'm about to show you. And I just didn't pull the trigger again, but what a massive trade that would have been. Just pulling the trigger and not necessarily worrying about the P&L, right? Like there was something I watched during a short clip for SMD, those guys. Just don't want to misquote that, so. I'm not sure if that's the name, but it was something I watched in a short clip where the guy was just basically talking about one good trade, right? Like your job is to make one good trade and not necessarily care if the trade goes bad or even if it does good. Your job is just to execute that trade if you see the setup condition occur every single time. And that goes into what Mark Douglas talks about. So I really enjoy or like that kind of trading psychology that we see happen often. But let's get into it really quickly as this thing loads up. Sorry, I really wish you guys kind of heard some of the exchanges that were going on this morning about the market, because it was fast, but it was definitely an opportunity to take advantage of. Give me 1 second. I don't know why this thing isn't like. All right, there we go. All right, so on NQ, this was the very first trade. As you can see, boom, there goes the fucking 270 wick. Yo, there's, you know what, I think this is worth explaining because like, this is a very hard thing to kind of do, man. But it's worth understanding how your brain could kind of figure out how you're gonna like work on this market. All right, so initially, you see this bounce that happened? We were looking for a 14,270 bounce because that's the 15-minute demand. So if there's evidence down there, you could probably take or execute along somewhere down there and be up a pretty decent, like 20, 30 points right now. Now the market tends to continue to drag down on the 5-minute line, but we don't know what's gonna happen. But let's just go through the trade really quickly. We also anticipate a bounce at like the 1500 level. So here's the trade. Why would I take shorts in a condition that's basing out right here? Well, all they're gonna do to me is push up into the money zone on a 15-minute middle chart and then reject and come back down. Or they're gonna push up into the 1 hour money zone, red cloud, and then come back down like they did prior to that, right? Now, I can't give them too much space. So somewhere up here was supposed to be my stop, no matter what, because if that zone doesn't react, then we're gonna get this possible flip of the money zone, and then your brain starts to think, well, damn, it's gonna go up. Anyways, I'm just always going to take those levels and hope the market comes back down, because that's what we statistically see happen. So that's the part that I was talking about. Like, as a trader, you just have to execute and have good stops in place in the event that, you know, something like this may happen. Now, had I stopped out where I was supposed to stop out, instead I took another trade. And I had 2 chances to get out break even when I saw the momentum climbing to the upside. So they went up, came back down. I was green a little bit. They went up. They came back down. I was green a little bit. And on this ramp up, I took another entry. And that's when they decided to say, oh, we got them. Let's smoke them. So they smoked me to the upside. I ended up just killing the trade right here, only for them to do a 10 minutes later to start the downtrend. Now, we knew that supply was up here, all these red lines. This is your 1 hour supply, your 15-minute supply, and your 5-minute supply. They broke through the 5, broke through the 15, broke through the 1 hour, only to come right back down. And that's kind of where you want to put your money up, but I had it at the money zone. So here goes the difference. You're either a trend trader or you're a supply and demand trader. Those are the only 2 strategies you guys ever hear me talk about. Like, I'm not trying to create anything more complex than that. In a trend trade, all I need to do is see this 1 hour bearish, and I'm going to execute a trend trade. If the 15-minute is bearish, which it was at the time, I'm going to execute a trend trade. If the 5-minute is bullish, which we did see that possible flip on this candle up, and then this pullback right to the money zone, right? Like right to the 5-minute money zone, caused another bullish momentum to the upside. All they did was push right into supply before deciding to give us another supply line right here on the 5-minute to slam the market down. These levels are there before the market opens. You guys see me do this every day when I do the pre-market show. So we know where the market should react or get a reaction from, or a rejection or a bounce from, right? And the idea is, well, when do I turn on my supply and demand trade versus my trend trade? I don't know the answer to that. I don't know how to say, today I'm going to be a trend trader or today I'm going to be a supply and demand trader. All I do know is that if you trend trade and you hit targets, you will make money. If you hit a supply and demand trade and you hit targets, you will make crazy money. So which one you decide to do is on you guys. I don't really know, but the levels are pretty decent. So for example, this 5-minute kicked ass this morning under the condition that it should have kicked ass. The market was above the 50 HMA. It came back, broke out, came back, retested, boom, and broke out. I can show you this over and over, right? Broke out, came back, kicked ass. Broke a little bit, should have probably rejected, didn't, kicked ass, right? This time it broke, came back, kind of tested the area. You could have thought, oh man, it's gonna show. This is why it's hard to use lines like moving averages to trade, but it is a good guide. And once it came back, broke down, hit that, kicked the ass to the downside. So I don't know when you FOMO into this, putting this as your stop, but that move pays out pretty well. I don't know when you FOMO into this, putting this as your stop, but that move pays out. This is a straight break of that line. So you're getting in somewhere here, getting a little bit of the drag, and possibly staying in through this. But that's the kind of idea of trying to trade a moving average, which we don't necessarily do. We trade a zone, a supply and demand zone, or a trend zone. And the trend zone is usually your 9 EMA and your 20, but we have an 8 and 13. That's what this cloud is basically doing. And it's under a different kind of like mathematical formula. But yeah, to the upside, that move right there took me out. I got out way up here above my sort of target zone. Now, this wasn't probably wasn't a realistic target zone. This would have been a realistic target zone, and that's why I got out right there. They broke the previous swing high. I don't need them to go crazy to the upside afterwards, but usually that double top is where the demand is going to come in, and the supply short sellers are going to come in, and that's exactly what happened. So it's a zone, not a level or a specific number. Anyways, what I did, kind of learn during this was to implement waiting, being very patient for this 5-minute go signal. Now, this signal could break, but it's a defined level now that you choose to exit the market if this condition doesn't play out. So in other words, I didn't know, I felt that right here was my entry for this trade to come down. Now, the execution of that would have had to be something along this line. I need to get in before this market decides to go to the downside, and I just didn't pull the trigger. Like I didn't pull the trigger when it bounced up here and wicked back down. I didn't pull the trigger here, and then down here I don't even want it. I don't even want to touch it. But here goes your like 1-to-1. Here goes your 2-hour trade right there. So it was a good setup because the 1 hour was still bearish. The 15-minute, they flipped bullish, but as you can see, that was short-lived. And the 5-minute was bullish. So then it becomes like, well, why would I take a bearish trade in a 15 bullish, 5 bullish? Well, because you're not really trading the short time frames. You're trading this supply level that seems to be kicking in. It's a supply and demand level. This supply level, which we knew was a 1 hour target, 15-minute target, then had a new 5-minute target. So it develops the plan way before the move happens. 1, 2, 3, 4. This is 20 minutes where you can decide, you know what, I'm going to execute. And then you just have to take the trade as a trader with a really good stop and just let the trade work. And that's where I'm saying, like, I couldn't tell you to take the longs here for the bounce. That's a decision you have to make under the assumption that we're going to probably bounce at the 5-minute, 15-minute money zone, which is somewhere around this area here. But if they break through that, like for example, if the trade setup looked a little something like, all right, I'm gonna enter somewhere around here with a stop below that 50 HMA, then your longs should be somewhere like maybe, here's your 1R, here's your 2R, right? You're looking to break through supply. Not a bad trade, it's a plan. It's just, will this work? I don't know. All I know is that 1 hour is bearish. And when the 1 hour is bearish, look, a rejection from that zone, a move up to that zone, a rejection from that zone, a move up to that zone, a rejection from that zone, a move up to that zone, a rejection from that zone, a move up, broke the zone. Come back down, are they gonna bounce? I don't know, but they broke right back. So the 1 hour, under the condition of 1, 2, 3, 4, 5, like 5 times it rejected that level. Why would I, like, you know what I'm saying? Like after a while, you have to think like, I should be playing the macro move. How's it going, Toy Wallet? Just going over some trades. So I should be playing the macro move, and that's really like, I would not call anything out unless it was a 1 hour or a 15-minute kind of like call out. And if we're wrong, but that's where we see the higher probability of trade setups working. And as a trader, again, it's just not easy to kind of take the level or be patient enough to wait for that level or to get in when the market starts to trend. So we rejected this 1 hour, which looks like this on the 15-minute. That's another supply level. They're rejecting supply. And as they come down and you miss that move, this consolidation into this kill zone, this money zone, is your next entry for the next move down. And that's a trend trade, right? 15-minute. When we still don't see a 15-minute demand line coming in, which is kind of unfortunate because this market could pretty much keep dropping. Let's see. But we'll see what ends up happening. Let me just clear up the chart a little bit. That was a targeted area up there. We got smoked on that trade. So that's your kind of conditions. We knew we wanted to short. We should have been taking a supply line entry to bring the market back down. I know a lot of, if you guys don't hear in the channel, some of the guys are like, bro, you taking a short here? And I'm like, yeah, like if that 1 hour kicks in, this is the type of move you get. This is 112 points from the high, 140 points, 137 points. from the high. I want that. I don't want a little 20-point move. I don't want I want that, because one of these is your one good trade. That's your one good trade. Even if you got stopped out here when you took the shorts, that's 33 points to make 3 times that. That's your one good trade. And this happens every day. All right. So enough of this. I think I beat this up. We're at this current demand level down here on the 15-minute. We got that one from this old level right here. You can see that. All right. That's your 15-minute demand line where they're going to probably get some smoke. So this is close enough to that where you see a possible reaction. Now, if you were playing supply and demand, this 5-minute is showing you that buyers are stepping in there. That's your evidence of taking the longs here, risking whatever you're trying to risk. It's usually the swing low. I mean, if structure is going to form, then the market's going to make higher lows from this level. And it could probably reclaim the entire move down. But that's where you want to start, like, you'll start seeing that this is where you want to put your money up, because even right now, you're decent. And while I was talking, we were like right here, 89, moved all the way up to that. So a nice little 20-point pop. 13, 14. But now you're going against a triple threat, bearish trade. So this is the consolidation that we talked about, where all they're going to do is probably consolidate and then break down. Are they going to take out demand? This is where you have to decide. Are you going to take a trend trade, or are you going to take supply and demand? And I'm not calling out a reversal until I see a 15-minute evidence of it, which the 5-minute could basically go ahead without us. No problem. All right, so that was this morning's trade where we took a loss on NQ shorts only to be right 30 minutes later. Now let's go look at ES. After we saw the momentum going to the upside, I was like, well, fuck it, let's take an ES trade, right, to the upside. Now this trade, I should have been thinking the same thing I was thinking with NQ. Should have been thinking the same thing. This one is less sloppier than NQ. Rejects the money zone on the 1 hour, far left side of the screen. Rejects the money zone right here. And this area here, which was once demand, turns supply. And that's basically what you see happening here. Now, I didn't point out the levels this morning on the ES because I was a little bit late, but this is all you're seeing happening, right? Into the money zone, push back down. Into the money zone, push back down. But I decided to take the move to that zone and then just get the hell out, which was this into the money zone move, push back down. So, and this is ES, so I don't need a lot of points. I just need to get the hell away from this level here. I took what you would consider, I wanted this money zone bounce, not at 96. I missed it, got in at 98. The market never really made me red. It just kept wicking, shot up to 200. It's only 2 points. And then it made a move all the way to 203. Now ES is $50 per point. I got the hell out of there on this spike because it was fast, it was aggressive, and look at where we are on the 1 hour, far left side of the chart. If I stood in that, hoping that the market breaks out, I would have gotten cooked. Absolutely cooked. Now, I would have probably, on the way back down, killed a trade right here at 4201. The reason for that is because this demand line should send the market up, and it didn't. It reversed and turned back into a supply line. So really quickly, in the morning, I would be doing things like, all right, well, where's supply, where's demand? And immediately, this is your supply right there. This looks like a possible demand, but we were already underneath or playing with that level, so maybe that would have been supply. This would have been demand, but I like to give it room, so I'd have made it something like that. I'm pretty sure 15-minute is going to be there. I'm just bringing it down so when I go to the next chart, so you guys can see how this thing kind of gives us an idea of where the market's going to like become a piece of So That's your 1 hour. Here's your 15-minute supply right here. I would have to go to the previous like level back here to try to find some sort of demand. No demand, no demand. Demand is right there. So I would bring the 15-minute demand from there to down here. All right, and then I'll just shoot to the 5-minute. And at the time, this was demand, that was supply. Okay, so that would have been what we would be looking at in the morning. Now, what did we do? Above the 50 HMA, tap demand, shot up. So if that's demand, I could take that play to the upside. It's just a plan. This plan was short-lived because the trend trade was what worked. Don't know which one's gonna work, and that's the constant battle. But if you can reduce the market to just those two things that you're fighting, you avoided taking trades anywhere because you're only looking for a specific zone. I'm gonna highlight this zone right here, and this is gonna be your 1 hour zone to enter for shorts. Or you're gonna take this zone here, which is your 5-minute demand. And that's it. You're gonna take your demand or you're gonna take your trend. Whichever one you choose is on you, but you have to stop the hell out of this market, because if I stayed into this trade, my account would be blown on that ES trade. So, you know, taking L's is a part of it, but if you can catch one good trade, guys. Even this one, I was like, oh my God, we can go short right here. Because we were still in that 1 hour zone. So that would have been this entry on this pullback that they did right here. All right, and it respected everything that we talk about when we do our triple threat trade. Your reversal trade your triple threat trade is your trend trade when all 3 time frames are bloody red or bloody or green. Anywho, you would have been taking this trade back into from this demand back up here because you had the evidence that you needed. The 15-minute looks like they're trying to stop this trade, so I would be calling a reversal trade at some point when this gets straight. Right now, the 5-minute is straight. You can gun it if you want to, but we have the 5 and the 15-minute showing evidence that buyers want to step in down here to probably take advantage of this massive discount that the market has given over the last 2 down days. Okay, but we had a heads up to take this market down because of those conditions. I don't really explain this over and over, or I stopped. When I first started trading, I was explaining this over and over so people can understand what they were looking at, and probably, you know, kind of like demystify the noise that was going on my chart, because there is a lot of things going on. There are a lot of different colors and stuff like that that, you know, could probably make you go a little bit crazy looking at it, but you know, basically, like, it's not that hard. We're just taking these zones, right? I'm preventing myself from taking trades anywhere, and as opposed to, you know, a really good place. All right, so this trade right here, you can see it, got in right there, got out right there. Thank God, because that down move was vicious. Anywho, those are your 2 trades so far. Right now we have a possible up trade going on, but I think you always know that I'm always going to tell you that there's 2 sides to the market. Your short trades are going to be around this level on a 15, and this level on the 1 hour. Now, whether you want to wait for them to get all the way up there, it's just like that level on the 15 and basically somewhere up there on the 1 hour. Right? And that's just it. That's what the market does. If it's trending, we're going back down from right here. So let's see. If we called a money zone trade from here, you stop out if it gets above that red line because you don't really want that flip smoke. And let's see if this works out. All right, let's get back to the group, see what the hell they're talking about.
Like, the only time you should get out of your position is when you have experience that I have, where you can kind of really read the level 2, and that only comes with time. So,
Are you saying something that I said in our conversation a few weeks ago that you were disagreeing with me on, Vega?
but for him, yes. When he levels up as a trader, he shouldn't. But
that's what I was saying though. As a new trader, like 2R all or nothing is what live traders always say. I
think that yes, in certain scenarios, it is good to go ahead and do a 2R all or nothing or whatever. But I also think that it just depends on, and what I mean, here's what I mean. I'm a firm believer that I don't use hard stops. Me personally, I don't use it because I know how to read tape properly. So I know when a level starts to get heavy, I can stop out. And yes, I will get some sort of slippage, right? Because that's the cost of letting, to see something, to see if it's actually going to stay heavy. Yes, you're going to get a little bit of slippage. But, I'm a firm believer of that. But for you, one, you're not in big size. And two, it is small cap. You have to expect flushes like that on volume in small cap because that's how they build liquidity.
Oh, that's a good point. I should have thought about what I was trading right there. That's a good point because I definitely do see that a lot. That makes a lot of sense, actually.
Yeah, you're trading small cap names. You have to understand if you're trading small cap, there's going to be flushes because they, unlike big cap. Big cap has real players. Big cap has real algorithms, real hedge funds behind it that provide liquidity. Small cap does not have that same capability. Sometimes you can get people toying around with the stock, algos toying around with it, but for the most part, it's people, and you just have to keep that in mind, that flushes are supposed to happen. As long as that flush is a higher low, if you're long, as long as that flush is a higher low to where you were at, even by a couple of cents, you stay in that trade because you have a hard stop in.
Right. Okay, that makes sense. Yeah, I was so I think maybe for large caps, maybe I might set it to break even, once. But definitely I shouldn't be doing that for small caps then.
Yeah, for small caps, I think you should, at least at your state where you are, I think you do kind of what LMD says, where you have your stop and you have your reward. For small cap, you should do that. For big cap, they play a little bit more games, right? Like they go under your level and then they rip it right back over. They play a little bit more games because they know. And small cap, they know as well. But a lot of times what small cap does is they flush it down if you're long, and they don't get to your entry. They get like a couple cents away from your entry or a couple of cents away from your stop that makes it a higher low. And then, they make the move because they're building that liquidity. You need that liquidity.
Yeah, okay. I always say, it comes to like your chart readability too. So like, let's say you was just in that trade and it was coming up to a level of resistance over on the left-hand side, like that'll start giving me concern to get out of a trade. But if you see it break through a level and then kind of pull back to it, like I'm gonna still have confidence in the trade. So yeah, it comes with just experience of like reading the chart. The better you are reading the chart, the more you can be concerned, or the more comfortable you could be with kind of trading the chart as it is.
Yeah.
Right. That makes sense. Thanks for looking over that for me. I wasn't really sure. I was like, man, I did the wrong thing yesterday, wrong thing today when I switch it up, but that makes sense. I'm actually gonna write that down so I don't forget that.
Yeah, you gotta understand that that's how small caps maneuver.
Yeah. See, I've known they've done that, but I just never made that click of like, it's building liquidity. It doesn't get out type thing.
Yeah, because if people don't get stopped out and they don't get shorts in, because Small cap needs shorts. They need shorts. Like if there is no shorts in small cap, like you're not gonna get no moves. They need to squeeze people out. So what probably happened is that flush came, a bunch of shorts slammed in, and then they squeezed it up. And then a bunch of shorts covered. Because they were probably using VWAP as their risk or whatever the case is. They got stopped out, they covered, people are buying as people are covering, and then they rip it back up.
Okay, that makes sense.
Yo, this is crazy.
Less.
Sorry.
Ooh, looks like SPY's rebounding.
Yeah, it was near that demand that I was talking about at 416.
Yeah, I got an area there too.
You saw the 15-minute demand line that came in?
I just have an overall, so I don't, like on the 1 minute, it got like near 416, and I have a demand zone there.
Yeah, I got a zone there, but I just saw the line that you're talking about, Spark 2. I didn't notice that till just now.
Yeah, that's a part of my playbook, so I always like kind of look for that shit. But the 5 minute came in and it's doing a nice move from that level. Crazy.
Up right there from the 5 minute.
Yeah. I think the market's gonna probably reject this level here, if not that one. Probably the 15-minute supply line, money zone. So on SPY, it's about.
I think I might be done here for today because that Apple setup was like an A+ setup. So I might you only get like one of those, like one of those like a day type. You only get A++++ ones like once a week. But last week it was like multiple A+ days.
I'm pissed, bro. They squeezed me out of this whole move, and I was gun-ho in the shorts because I had a friggin' A+ setup on my end, bro. Like, just got caught up in the upswing. Fucking 140-point move to the downside on NQ. LMD was like, "You going long? I mean, short? Hell yeah!"
I did like your short in the morning. It just
They squeezed me.
You caught that bid.
Yeah, they squeezed me, bro. Like, I can't take any more of this.
But I think a lot of it had to do with Apple, man.
Yeah, man, and Microsoft.
Because when both of them, right? So like when Apple catches a bid, man, it moves like, there's so much weight behind Apple. So when it moves. The market, it moves everything.
It's crazy. But between both of them, SPY got both of those things in its arsenal. You see that rejection from the 5 minute money zone? They could bounce, probably go back up there, retest it. That's where you want to put your friggin' money up at, man.
I don't know. Were you in here when I was talking to Olu about my trade?
The shorts on Apple?
Yeah, were you in here when I had the full conversation about like being patient?
Nah. Talk to me.
So I was telling him that a lot of people, when they're talking to a lot of traders, one thing that made the trade work is not just
holy shit.
Not just the chart that made it work. It was my psychology behind it. Because a lot of people, when they hear other people make trades and other people are profitable in their trades, what does everyone try to do? They try to start placing trades to try to catch up. And you can't do that. You have to wait for your setup. And I was telling him that, my setup, I wanted ES over 4,200 with the NQ over previous day's high, and then I wanted to see Apple do what it does, and then I wanted to long it. But since that didn't happen, I waited for the tape to change. So once the tape changed, as soon as bids let go and sellers and shorts or whatever stepped in and it started selling off, I joined that trend. So it took patience. A lot of new traders, they would hear somebody make money, that they're talking to, and try to get into a trade because somebody else made money, and then they end up losing money. So it's a combination of patience and just understanding overall sentiment and waiting for the tape to change. On Apple, I was just waiting for the tape to change. It was showing relative strength. As soon as previous day high ripped through, came back, flushed under, stayed heavy under, tape was changed.
Yeah. And I mean, I think we've come to the point where we use a few really good inclinations to or confluences to determine when we're going to enter a market. So everything you just described, waiting for the tape to change, being patient enough to do X, Y, and Z. And during that same time, the ADQD was fucking tanking. So
Yeah.
that's another confluence to say, look, this is definitely heavy to the downside. Now, remember we were also talking about, and this is kind of a testament to what you're talking about. If it hit 1,500, that's where we're probably going to see a bounce. If you look at Apple basically reversed when it hit the 1,500 and caught a nice little bounce. For me, it's just the money zone on a 15-minute and a 1 hour. So I would have been thinking about longs there, plus having the ad or the ADQD as a confluence to take that move back up. So yeah, I think
it was a good move.
1 second. Hello?
Oh, I dialed the wrong number.
All right, bud.
All right, sorry.
Yep.
What the heck?
Bro, all morning, bro. It's getting crazy calls. So yeah, man, I think just having your edge, man, but just believing in your setup with a good stop, it's kind of like the biggest part of trading that you just got to get to. If you get to that shit and you don't care about stopping out, when the move works and you're making 2-3 R versus losing 1 R, yeah, it's gonna be a great fucking day.
Yeah, I had a really good trade on Apple. I could have made more, but like my exit, I got in at 10:18 candle. I got out of the majority of my contract at 10:20s flush. I literally caught the lows, and then I held my runner to 10:27 candle, and then I let that
Sick.
go.
Basically, the whole friggin' tail of the down move.
Yeah, I caught the meat of the move, as they say.
That Apple setup, if you look on the 15 5-minute marksman, 170.
On Apple, you said?
Yeah, 175.35 was where your demand supply line came in. Basically, volume knocked that level.
175.35.
Well, I'm talking about like the supply line that usually comes in to tell you that the market's going to possibly reverse.
Wait, sorry. I'm not seeing a supply line or demand line.
On the 15-minute?
You mean what? Do you mean 177? Because you said 175.
Oh, 179.35. Sorry, guys.
Okay.
Oh, okay. Yeah, I see what you're talking about. I was like, where is that? Okay,
Yeah.
I found that.
So that line came in. You probably wouldn't have noticed that it was probably, straight until, your 10:15 candle. But by that time, the 5-minute already had a straight line up there. So
All the 5 one as well.
yeah, I'll just send you a picture so Vega could also see. This is gonna be in the daily day trades. So that middle chart that shows that line up there basically showed us that the market could reject that level. The 5-minute was already trying to stop the move to the upside. Once that got straight, that like 10:05 candle, you could have gunned the 10:10 entry, and in a trade like this, that supply line becomes your stop. So you would be risking, say you got in at 178.87 at the break of that previous candle, 5-minute
Okay.
candle.
God damn it, I'm here.
You would be risking 47 cents to make $1.42. So that's like 3 R right there.
Oh, shit.
Oh, I see what you're saying. Okay.
So
So it's out.
So like this is just a supply and demand like kind of trade. It's not like a trend trade, because the trend is up. This you know what I'm saying? So you're gonna catch a bounce somewhere, but if the market is telling you that it's gonna reject a level, your trade setup or your reason for this is just basically what we talked about. I mean, what I've been taking over and over, that 15-minute supply rejection. And if you have that 5-minute as evidence, now you're not really doing too much thinking. You're just taking the trade and letting the market do what the market generally does. But this, in a trade like this, the bottom of the Bollinger Band is where they're gonna friggin' bounce. So you gotta be willing to exit your coin or start scaling out down there, or you're gonna get caught up in that bounce that just happened. So
Right.
the trade should look something like this next picture I sent to you. That white being you entering this market under the same psychology that we just talked about. Oh, 15-minute supply line. Oh, 5 minute is already straight. Market could come down. I'm gonna take a trade if they break that previous candle. And then I'm gonna stop out if they double top and break into a higher high. And then I'm gonna go for 2R. Done. You've done your job as a trader. Let the trade work.
Right. I like that.
You know what I mean? Like, but this is just what I've been explaining to you since my trade, my reversal trade, it doesn't change. It's the same thing every single day. And I can go across the market and the market just moves this way. And, you know, like if I miss this move, my next trade setup would be, all right, well, I could take a trend trade. How would that look? It bounced right off of the 15 and 1 hour money zone, the green band.
Right.
Now the stop for something like that would be the previous swing low. So, right, and this is it. This is the only two trades I have in my arsenal, bro. The trend trade and the reversal trade. So I'm not confused about what the market does. It could look however it looks. Like when I called the shorts this morning and it just sounded fucking crazy, I can tell you the psychology behind that, and it's gonna be familiar because I do the same thing every day. But
Right.
yeah, but I'm not confusing myself with 20 different playbooks, right? Like I'm not doing that. That shit is a lot of work to try to remember all of that, to think about which one is doing, you know, and that's just what works for me. But, you know, like Vega said, he was waiting for that tape to confirm X, Y, and Z. He was even saying that he didn't like the market because ES and NQ weren't matching. By the time he was ready to get in, NQ started matching ES's flush. So there goes another one, right? Like it's just everybody has their reasons, but this trade right here would have looked like this, the longs on this trade. And I'll do this shit all day, bro. That's your long trade right there.
That pullback right there, right?
Right.
With that.
Now
That's the white minute or the white candle on the 5 minute.
Correct. Now the why is what's important, not necessarily, right? Like why are you taking that trade?
Because you got that the white candle is the it could go to the other Bollinger Band, right? Is that how that works?
The white candle is for the long trade that we're talking about. The white candle means that the market is going to probably enter into an acceleration mode where you're going to just see green candles afterwards. Like you don't want to see red after a white candle. So right now we're still just seeing cyan, meaning the bulls are weak, but they could get crazy. It's going to turn green if we get above that red line that we're flirting with right now. That 58.
Oh, okay.
Yeah, that's when it turns green. But until then, the bulls are still weak. And if that happens, we're going into parabolic mode. But the reason for the trade, like why am I entering during that white cloud that I just drew out? You got to look in the middle chart and the 1 hour for that condition.
Oh, for that said that pullback right there?
Yeah, it's a pullback right into what?
That money zone, right?
Boom. That's it. Rinse and repeat.
Yeah, I like that system a lot. It's simple and really defined.
Yeah, it's not easy when your heart's pumping and you're like, shit, I'm about to put real money on the line. But I'm not doing all that thinking about 10 candles this, 4 candles that. Like that's you guys because it works for you. So keep doing it. I'm not telling you not to. Just try to simplify everything because the hesitation to get into a trade sometimes will get you in all the way up here, and then another pullback for a double bottom. It's like it shakes you out of the trade.
Right.
And it's probably just a fucking shakeout. And that's how the market works to get retail out of their coins. But what seems to happen statistically is that at these 1 hour green band levels, that's where buyers were waiting. They were like, holy shit, I missed that whole move up. Wait, I got this discount? That shit was free money right there when they got back to that zone. Or it could break, but they don't care because they're going to stop out really tight.
Right.
So, like kind of reverse, whatever, just like you always hear me say this, reverse engineer your entries. so that you stop small and win big.
Psychology stuff.
What's that?
And get like the psychology behind them and stuff like that.
More like you know why you want to get in, so just get in where you believe you will stop out as close to that as possible. So if you do stop out, you're only losing a little bit. So that's the patient part. Like, I had to be patient for the market to enter this zone. I don't have to be perfect on the entry. I just had to wait for them to get in there. And once I saw that blue candle on the 15-minute enter, I'm looking for longs and, creating whatever reason I need to justify it. And for me, it's simple. It's in the green zone. They're not going to break this if this trend wants to continue. The market makers just had to pull back. So they pull back into that zone. Am I going to enter this trend? I could either say yes or no, but I'm going to fucking gun it, bro, in that zone, so I don't friggin' get caught up on a pullback that breaks below it. And generally, you just stop out. Like, if they break the swing low, you just stop out. But right now, you're up so much, at least 1 hour, that you could chill on this trade or just start scaling out. It's up 89 cents from the entry.
Right. It's gonna be based on, like how you saying, you want to see it get as close to your stop as you can get it.
Right.
See, I prefer to wait to see the confirmation and just take that distance into account when I size it. So my risk, like say you getting close to the stop as you can, and you still going to risk like say maybe $10. I'm gonna take the trade at confirmation, and I'm gonna still risk the same $10.
Yep.
But with yours, your risk to reward might be better, but you might not necessarily have confirmation that it's going to go back up. So it still may go a little bit lower before it goes back up.
100%.
So it's all about system.
Mm-hmm. Like, that's how I got cracked out of NQ, because I don't have that confirmation edge that LMD has, right? Where you might favor that kind of style of trading. And I think, so LMD, like on NQ, I mean, one contract is one contract.
Yeah. So see, on that system, I'm risking, but I still can risk, because most of the time, what I done found is I'm gonna risk maybe $10 to $15 per contract based on that chart that I'm using.
Got you.
So it just depends on how the chart is playing out. But yeah, that's the thing. And I was telling Evan that with futures, your risk is a little bit more because you can't break it down as small as you can with stops. Like
Right.
I can't break it down to where I'm only risking $1 trade. Now I have taken some trades to where like it was 2 points. Ooh, it was that in the bunker. Okay. Yeah, I done had like some 2-point risk trading in Q, which is only $4. But yeah, on average, and then times that it's like say 2 contracts. So you still can kind of manage it the same way.
Mm-hmm.
But yeah, futures are a little different, especially when it comes to the ES, because the ES is $5.
The thing about the NQs and futures is you have to take account that every $10 is the equivalent of like 10 cents on like a penny stock, which means that it would be the same for like Nvidia or whatever the case may be. So because of the price, you have to be able to adjust accordingly. You have to understand that, yes, the NQ and the ES move by the points. So you should assume that if it moves by the points, it's the equivalent of, if you trade small cap, it moving 10 cents.
Yeah.
Yeah, or really it moves by the tick. So like a tick is 0.25. Come on, man, quit talking about swing. But I just end up using mine based on a full point though. Yeah, I just like I round everything. I'm just like, so like a tick is 50 cents. but it's kind of hard to catch a stop that's only going to be one tick. Usually, like I say, on average, I'm catching two points is my usual smallest that I can get, which is $4.
Right. Hey man, you're a freaking surgeon with that shit, bro. I'm like, nah, I'm gonna give this like 10 points because I know, like you said, you waiting for confirmation that it should do X. So if it goes against X, you don't want to be involved in that. And 2 points is what your defined risk is because you know what to expect next. So for me, I know what to expect at that money zone, which is a rejection. I just need to kind of get in there. And once they establish that wick from that zone, I'm getting in before that next candle like kind of, does what it does, or they leave it. But then that risk is never, it's unknown to me. It could be 3 points. It could be, like I'll try to minimize it, but 10 is my max. If they leave there and I'm beyond 10, I won't take the trade. They gone without me because I can't allow the market to take that much from me on a MES contract. Right, just with this type of account size that I'm playing with. So,
but see, that's why I don't like to go with like a hard number.
Mm-hmm.
I'll prefer, cause even so, like let's say, like where you should stop out is gonna actually be. So would you say you risk per trade?
On a MES contract, I'm willing to only give it 10.
$10.
10 points. So we're talking like
okay, so $50.
Right. But I'm going for like 150 to 200 on the other side. And even if I just, you know what I'm saying?
Yeah. Hey, hold on. Let me call you. Let me get you right back. I got a call. I gotta take.
Yeah. Do your thing.
I ain't want to let you know I was jumping off the call, but I'll be right back.
For sure. Evan, I think you're getting close though, man. Like, just keep naming those trades and those setups.
Yeah, once I defined, like I was struggling with really like being comfortable taking pullbacks and stuff.
Mm-hmm.
But a couple weeks ago, there was just something I noticed that I just wrote down rules for, really defined, and I've been taking that a lot, and that seems to be working. So now I'm sticking with, I'm kind of doing what you're doing. I'm sticking with like two main, like setups in my playbook. Cause I have a bunch written out, but I'm really only liking like two that I'm like really comfortable with.
Right.
So I'm just going to stick with those for a while.
Yeah.
And how they perform. It's just a lot of times, it's like, I'm like, I kind of want to take this trade, even though it's not one of those two setups. And, I've kind of been getting burned off that lately.
Don't do it. Don't do it.
Yeah, that's the psychology part right there. I still got to work on, but
I want you to try this for those two setups that you have, because I think it's more, the market does a million different things, but your two setups, it's doing this. It's preventing you from taking every single trade that you think you see. Right? Like we see opportunity for money when the market was flushing just now. If you had a setup to say, oh, that's the volume I need, let me just jump in shorts, and it works, then it works. But if you took shorts at the very bottom and that was where the reverse happened, just record that data and see after 100 times of taking that one simple idea, does it work? And if the answer is 80% of the time it works, bro, run with that shit. Like, do it every single time. So with these two setups, it eliminates the fog of war, right? Like, in combat, there's a million moving parts. The tanks are moving, the Humvees are moving, there's ground troops moving, there's different teams moving, and you don't want to shoot the fucking friendly. So, you have the command center telling everyone where everyone is at. And it becomes like, okay, I know that Bravo team is on a north corner, I shouldn't be shooting that way, So the market is just like that. It's like, it's moving up, it's moving down, it's giving you wicks, it's giving you shakeouts, it's giving you supply line rejection, demand line bounces, trends. Like, which fucking one do I take, right? Like, it becomes crazy. But your setups eliminates all of that, and it says, oh, every time I see this, I know to execute. So with those two in mind, I want you to just take that 100 times. I know that sounds like a lot, but throughout the day, you'll probably see that setup happen like 3 times. And that's how you know you're in a good, like you have a good setup, because the day becomes boring waiting for it, which is fine. You can keep money in your account, fuck it. But if you see that setup, I want you to just execute with a really decent stop. And after a while, you'll get better at when you should stop out, because if you take one setup 100 times, the market's going to tell you that under that entry, it's only going to do 1, 2, or 3 things. It's going to double bottom, it's going to break, you're going to be wrong, or it's going to work.
Right.
And now you know,
Yeah.
let me wait for that double bottom. Oh, I can't wait for that double bottom because a V-shape happened. A whole bunch of different things will come from it, but you're going to know every single way the market can try to go against that one setup after taking it 100 times. And when you see the results of, yo, I can win 2R, 3R, 4R on this setup every single time and only lose 1R, you're not going to want to take all the other 19, you know, like let's do this.
Right. But that's more
But you,
a better probability on it.
Right.
but so you know that the that moving average spread I was talking about.
Yeah.
So the reason that I want to come up with that is that will allow me to take trades like how you take a trade. Like I'll take a trade without confirmation as the stock is coming back to the 9 moving average or the fast moving average.
Mm-hmm.
And then I want to know the spread between where the stock is at and where the 20 moving average, which is a slow moving average. That's going to be my stop.
Right.
So let's say that the stock is at like say 101, or actually let's say 107, and the slow moving average is at 105, or let's say 101. That difference is 6 points.
Mm-hmm.
So I'll get in the trade risking those 6 points, knowing that the stock can come back down to the 9, because it may not all the way be at the 9 moving average. So it can come back down to the 9 moving average, catch support, and then continue higher.
Right.
And that gives me my stop. I don't have confirmation that it's going higher, but I have confirmation that it's in a trend and that it's going to catch support off of the 9 moving average. And then I just know that the 20 moving average or the slow moving average, normally if it breaks the 9, it's going to catch the 20 and kind of catch support if it's in a good uptrend. So that's the other thing that I've been looking at. And like I said, I could do the math, but if I could just have a bubble on the chart that just says X amount of points is what it is from that price to the 20 moving average, it would just make it so much easier for me. But that's the strategy I'm working on for taking the trade without having that confirmation. Like without waiting on the pullback or what Evan and myself know as a buy setup. Because that's all I basically trade right now. I done went straight back to like the old school live traders, but I just used the 9 and the 20 as the further confirmation. When that fast moving average is above it, I know I should be taking a long trade. When the fast is below it, I know I should be taking a short trade. But I'll take it without confirmation, using the slow moving average as my stop. And what I done found is I need to give it like maybe 2 more points below that. So if it's telling me that it's 5 points between where the price is trading and where the slow moving average is, I'm gonna give it 7 points.
Mm-hmm. I like
just
that.
To give it that little whip that sometimes they kind of whip down below it, that little shakeout candle.
Right.
I'll do that so that I don't get shook out a lot of times. But that's how I've been taking those, like the nighttime trade, where I just take a trade and get in it and go to sleep.
Mm-hmm.
Like I did that this morning, and let's say that I had my target set at like 412. Whatever the first 3 numbers, the 2 numbers leave off of it, just say 412. This thing came to 411. and then turned around and came all the way back down. That didn't happen to me twice now, where I had my target just outside of where the heck it finally kicked and turned over at.
Damn.
But yeah, that's how I've been taking those plays in the evenings. I just I use that fast moving average and that slow moving average, and I just put my stop below either the slow moving average or like on the one I use previous high of day and just put my stop right below it, and that's the one that really pays pretty good.
Crazy. Yo, ES is approaching the daily money zone. Woo-hoo. Bounce out of this thing could be crazy, and I think it's following a trend line that you would draw.
Oh, you blocked it.
Did you just hit something?
Yeah, I hit a golf ball.
That sounded
It's
like,
down there on the left.
sounded a strong hit right there, LMD.
Yeah, I smacked it, but I kind of pulled it.
Bro, you got to scream 4 or something.
No, Nigeria.
Yeah, that was smacked.
What does that mean, smack?
Like hit hard.
Oh,
I should have did what you did and took an iron. I don't know what I was thinking. That's probably.
I should learn golf, man.
I just looked at my watch and saw it was only 300 yards.
Damn, here comes another possible break. NQ.
I think Microsoft is bleeding out, dude. Microsoft is bleeding out. Apple's like holding on.
Let's see. Let me
Crazy,
check my
man.
Apple contracts. Like I said, these are the days that make me want to get out the trade because.
But this was a nice trend day. This was nice.
Yeah, if you could catch that time.
Yeah, I'm still up 58% on the Apple contracts.
You took shorts?
Who?
You in some Apple shorts?
No, nah. Remember, I'm swinging Apple.
Oh, you straight.
Oh.
You straight.
I got Apple contracts out to, I keep saying, I just looked at this. I keep saying July. These are the June 16 contracts. So I need to watch these a little tighter. The SPY contracts I have are out till July.
Yeah, Microsoft is just bleeding out right now.
No, I might pull out of 5 of these. I got seven contracts. They up basically 60% right now. Decisions.
I'll see you guys on Friday.
Hey, the big dog.
All right, have a good day, guys.
Two.
Edited.
Bro. Nah, you gotta respect it. You gotta respect the jokes. You gotta respect the jokes. Bruh. Man, I wanna start trading ES and NQ a lot more now that I just have to, like, the opportunity there is insane.
NQ presented a really nice setup. I like the bounce that it had at like 10:45ish, where it rejected previous day's lows. That's a very good setup. Nice risk reward. And honestly, there was no reason to even get out. It didn't even give you a reason to get out the trade.
For the shorts or the bounce?
Yeah, shorted.
For me, I had to, bro. They stretched me. they went too high. But
The short right here at on MQ at like from 10:55.
oh, my bad. Yeah. I call that on ES too. Check ES. It's the same exact price action. They basically rejected the 5-minute money zone.
That's for the NQ. In my opinion, the NQ was nicer just because you had previous days low there, so you can use that as your risk, which wasn't much. I mean, the high of it. Say you got lucky and caught the high. I mean, you're literally risking, what is that? You're risking like 2 points, 3 points.
Yeah.
And I mean you're up like 80, 70 points, something like that. Like that's a monster move.
Yeah, on NQ, man, that thing is a beast, bro. Let's see.
Yeah.
You got it.
I wish I traded NQ, but I don't. But if I traded NQ, I'd probably be fucking killing it every day, honestly.
Yeah, once I stopped trading options like that, bro, shit was easy. And I knew it was gonna be easy with my system. I'm like, bro, all you do is take fucking trend trades and fucking supply and demand. You just have to, I just have to stop out. That's all I have to do, and I would kill this shit. And I just started doing that, stopping out, taking little hits, paper cuts here and there. But if I'm right, I'm banging like 80, 90 points, bro. So I'm really loving it right now. And plus the pullbacks, you could withstand some of these pullbacks and still be up nice on a trade, or go to break even. But if you took NQ, bro, with those amount of points, bro, you're gonna be lit. I'm talking about $1,000 days very easily, but can't be wrong, because that shit'll burn you.
Dude, is Apple the only green name right now? I think it is.
It's still shooting up.
barely. Yeah, Apple's so strong right now, dude.
Another money zone bounce off the 5 minute. It's crazy.
It's so strong.
Well, now let's see if it breaks that previous swing high right there. It's struggling to get into green acceleration mode. It's still in get ready phase.
I wouldn't short this thing until it tries to go for previous day's high. It's just it's trending way too well.
That might be the only thing holding up the market.
Yeah.
Was that Apple?
Yeah.
Yeah, Apple's so strong right now, bro. Like versus everything else, Apple's just out here trying to hold it.
Gotta hold them contracts a little while longer. If I, as soon as I see them green, I'm ready to take the money and run. That's the big picture.
Oh God. Oh my God, yo, Etsy, what the? Why do you guys want to just take my money?
Y'all with that Geo lately? That's right.
Nah, Gio's been MIA for a while. Haven't heard from him in a while. Netflix, mean fall, starting to grind. Netflix looks like Apple, Vega.
Bro, looks strong.
Just
Oh, that's gone.
it found a base and now it's just grinding to the upside.
Nice up. Settle. Good roll.
Shit costs $4 to get in and out of an ES trade. It's crazy.
On Trader Bait?
Yeah.
I didn't think it was that expensive.
Yeah. But you're gonna get $50 a point. So
Oh, on EX.
yeah. On MES is like I think what, 60 something cents?
Yeah, that makes sense. It should be like 1/10 of it, so 40 cents
Yeah.
plus the fee. Oh, they robbed you.
I'll be back, guys. All right, guys. It's 11:30. I want to start kind of just avoiding trading after that. Although I could trade all day, but yeah, I don't know, like, I think sometimes I get caught up trying to trade too much and get burned out. So I'm going to avoid that. Microsoft still looks strong to the upside, possible breakout of that. Looks like Tesla is still grinding to the downside. I don't know where these demand levels are, but if we get back to the futures, as you can see, we broke through that on NQ. We're looking for 4170 to get tapped, but we do have a 5-minute line, as you can see, that's acting as a hater for this downside move. Yeah, I think a lot, like just thinking about trading, a lot of trading is really gunning it with a decent stop. And I know how crazy it is to say, oh, I'm going to get in right here and have a stop way up there. I know it sounds friggin' ludicrous, but if you did that, you'll be up so big riding the trend and just kind of like chilling, trying to avoid this kind of price action back to your upside, like kind of getting in right here. You'd be chilling, you'd be green. And you have a demand line here, so reverse. Ooh, we broke out this time. Yeah, ooh, another one. Let me get the hell out of there. Go reverse. You need to be playing ping pong all day, probably getting that move that we talked about where that 15-minute has to form before I ever call it. So yeah, 15 minutes still struggling on ES. I'm not sure if it's struggling on NQ, but look at where we keep rejecting, right? Like wicks. That's where the sellers are trying to keep this trend in check. But we do have big demand here. This is your daily demand zone. Buddy said, at me when that shit hit. He's not leaving until it hit. Buddy's an animal. Big shout out to Walter Beast. He was one of the guys that contributed to my evolution in trading. I feel like everyone kind of can learn from someone else. If you pick up a little bit of stuff here and there, it's not like there's nothing wrong with that. It just takes the ability to be open enough to kind of like just see what they're seeing, and if they can explain it. Like, I think a lot of people bullshit in this market and tell you, oh well, look, just keep taking this higher low, double top, whatever. But it's not easy, because how did I know this was going to be a double top? I didn't know, right? It's not even a clean double top. It's not even, but it is a lower high. So I used to take the lower high. When do I take it? Take it down here? Wow, I got to risk all of that. Those are real fucking thoughts that goes on in your head before the trade kind of execute or performs. And I think that shit is hard. But Walt was like, yo, look, man, the market's going to ping pong between supply and demand, and I I've always had the supply and demand levels that came up. I just never really developed an edge to trade them. But if you just take a step back and you look at these 15-minute demand supply lines, man, look at this. That's when the lower high start happening, you want to get caught in that slippage, that drag. So those pullbacks, I'm shorting. That's why I think a lot of people are like, you shorting this market during the upside swing. I'm like, hell yeah, I'm shorting this market. Just got clapped on NQ. This shit's crazy. Let's see if we get another rejection. After a while, when we get above that 50 HMA, it's same price action over and over. This consolidation into this is the kind of like longs I would like, especially on a reversal trade like right here. So we'll see what ends up happening. So now we're going to get purple candles. Give you guys an idea of why these things are kind of triggering. Blue is distribution. You kind of want to see a rejection and, you know, red after you get into a blue kind of scenario. That's your pullback entries. Dark red is your actual pullback signal. Bright red is acceleration. So during all of this, they accelerated the market. And they have take profit dots coming in along the way. So the market is basically telling the story as it comes down. Pullback into dark red gives you your pullback confirmation. Blue is distribution. So distribution happens here where you tend to want to see the market come back down from that red level there. So I like the fact that, you know, you kind of get blue candles there. Now, if you got into it with a previous swing high as your stop, then it is what it is, right? Like that's just your trade. If you don't take this out, then you're subject to this, which is all right. I don't think there's anything wrong with that. But replay. This is what you got to do in trading, guys. NQ is still dragging to the downside. We might miss this one. All right, so it closed pretty strong right here. And you want this to not reject this level again with those wicks. But you're not going to see anything other than purple candles now, showing you that the bears are starting to get weak. So would you want to go long when bears are getting weak? Yeah, it's kind of where you want to go long. Is this 15 minutes straight? Yep. All right, so I'm going to call a reversal trade. We're going to have to risk 78 to 74. So about 5 points, right, to the downside. See how high they can take this. 70s, whatever you can get in that kill box. So if you're risking 5, 79, we want to like basically get all the way up there. We want to get all the way up there on this trade. All right, so let's talk about the why. Reason for this trade: 15-minute demand line has formed. 5-minute demand line has been here. They went up, giving us a possible double bottom kind of scenario setup that I like to see, and then showed some strength down here. Now, will it work? Nobody knows. We are above the 50. If we do come down and we bounce off of that, you'll see another really good aggressive like move to the upside. I know that you guys are probably saying this is not a double bottom. It is not. It is a lower low. I can show you times and times again where the market reverses aggressively back to the upside. Now, where are we going to see smoke? Right here. So if we get there to the top of the Bollinger Band, we're going to see smoke. Top of the Bollinger Band is where you would get your double bottom, your double top play back to the downside in this aggressive downward trend. But we don't know. So remember, everything is just calculating, mitigating risk, and taking probabilities. So that's all we can do. We are at 15-minute demand. Hopefully they don't want to go to 1 hour demand, and let's see if this trade works. This thing right here is how I gotta start trying to figure out how to get into that shit. Start seeing that line. Maybe an alert whenever that line triggers. Look, it should have saying PX push. I don't see that. All right. What are we rejecting right there? 15-minute line is what we're gonna have to get through. Let's see what you got, what you got. What's love got to do with it? Got to do with it. All right, guys. So we passed through the 5-minute rejection zone. This is where the bears are raiding, right, to take us down on the 5-minute. But we still have the 15-minute to take out. If we could take out the 15-minute, which is around this level here, I have an alert there. That would also be the top of the Bollinger Band on the 5-minute. Take profit, because that Bollinger Band is a monster to continue the trend. If we get through that, blue skies to the 1 hour all the way at 41.95. So, you know, basically that's what we're working with. Market perform. I mean, if you want to get out right now, you get out. Wow. All right, so we made it close to the top of the Bollinger Band. We need to either slam through this shit or that 15-minute is going to kick our ass. Se voy a matar. This is 15-minute rejection. Top of the bowling band. It's fucking Bollinger Band play, bro. Yo, I was just texting my boy Q that, you know, the reversal play on the 15 minute is money. But once we hit the top of this Bollinger Band on the 5, they're going to give us smoke. And then, boop, another one. Boop, another one. We are in a possible push phase. So, you know, we want to see candles constantly closing higher than the next one. When do you kind of give up this trade? I don't know. My break even on this, my entry was 177 on ES. So we got a 177 entry, 2.5. I smacked the hell out of that candle. 177 entry on that. They took me up to 6 points. That's, oh, there goes that rejection from the top of the bull, bro. And when I tell you this market is textbook, bro, textbook, no brother. And we got that 5 minute line. Yeah, basically, if that supply line on the 5 minute kicks in, which is where you know, the top of the Bollinger Band is, it'll be a lot of confluences here. Top of the Bollinger Band on a reversal trade is your target. I'm trying to go and break through that, but money zone on the 15 minute, or where the shorts are kind of waiting, and I think I mentioned that the double top scenario would be like, you know, hell to get through. Doesn't mean that we can fail. Doesn't mean that they won't consolidate for 10 more hours. It just means that that's where the enemy is, you know, that's where the enemy is lurking, bro. That's where they at for this potential play. You just gotta be willing to let them stop you out, bruh. Stop me out, cause I ain't fucking leaving. But yeah, I mean, you can bring it up to break even right here and not deal with the shenanigans of the market. Oh, she's getting happy. She's getting happy. Oh, they're coming for the break even. Boom, dum, 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 dum. Boom, dum, 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 dum. Boom, dum, 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 dum. Follow me. Follow me, yeah. Follow me. Follow me, yeah. This is a fire ass re-entry into the shorts because, you know, you're just kind of going with the 15-minute money zone trend. So that would have paid out pretty nice. Don't know if it's gonna continue, but not a bad setup. What the fuck, bro? TOS be tripping, cuz. Tripping, cuz. Why won't you follow me to a place? That's fucked up. They done hit the break-even level and then did that bullshit. Could come down. We have an official straight line up here. Don't know what's gonna happen, but clearly you see wicks down here showing you buyers are trying to defend this zone. take profit, Doc? Nah. Hey guys, that's the type of pop that you need to like, you know, take some advantage of. So scale out if you can right there. We will see somebody taking profit at some other level. We don't have a 15-minute reason to leave yet, so we're back up at the high, the top of the Bollinger Band on a 5-minute. Boy, what a friggin' dump after breaking out of that zone. This is not a 1 hour dump, but geez Louise. Wow. Wow. This trade is giving me the boredom. All right, guys, look like this trade is doing pretty well so far, even though those wicks occurred. You see how the 50 moving average is now both bending to the upside. We didn't get stopped out. Everything is kind of like working the way we want it to, but we are at R1, right? TP1 right there. So if you didn't take it before, you have an opportunity to take it now. Damn, bro, you can't drop like that, bro. Damn, brother was behind me. So we were willing to lose 4, and right now we're up almost 2 hours. On a move like this, guys, we have on a move like this, we have bright green acceleration. We talked about the dark red. On the other side, it's dark green. That gives you the pullback entries for the potential move to the upside. Now, I know in hindsight, we could have gotten in when the dark green conditions came in, risking previous low, but then this wick gets you out. Like, that's what they do. So I think the best play to do, instead of like, always concentrating on a previous swing low, is just keep your money like protected underneath this line here, because if they switch that line, you really don't want any problems with this market. But the opportunity to get in when the funds start to load up under this condition is what we're trying to always get into. So I was in early, could have gotten out, could have gotten back in, could have gotten out, could have gotten back in. Just scalp the shit out of this market. But I'm trying to do something a little bit different where we just hold the trade till target, and if we hit it, we hit it. We don't, we don't. But so far we are up nice on this trade, about $42 on one contract on ES. And we've been chilling this whole time, kind of just relaxing, playing the game. So all of this, although I saw it when we popped here, I told everyone take profit because that's the top of the Bollinger Band. Now we're making another swing to the top of the Bollinger Band. You don't want to see that top of the Bollinger Band fail too many times. So at something like this now, I want the ramp up to happen. I'm gonna walk away if the market pulls back to 41.81. So yeah, let's see what we can do here. Kill that, and then you know what? For the sake of trading, all or nothing. Don't let the market play around with me. I mean, if you just want to get out, then get out, right? Like, why trail it? Just get the hell out, take what you can, and kind of walk away. But if you want to kind of start hitting targets, we were willing to lose 4. So we're trying to get into 41.91s. Recon class badge.
I'm ready.
All right, I'm about to cut this trade. I'm kind of bored with it. Why am I see? This is what you do when you look at a trade. You just think. Oh, it might come down. You know, like let me get out. But the setup was nice. The curl was nice. We keep rejecting the top of the bully band. You don't really want to see a fucking another drop from there.
Activity in British Columbia has damaged the Canadian U.S. research facility base. A landslide has exposed the interior and
We'll
damaged
see
the
what
surrounding
happens.
area. And Russia's wrongly alleged that this has revealed a military weapon and are deploying forces on Canadian soil to secure it.
We'll see what happens. We got to start training our body to hit target.
strike. It's still dangerous.
This thing is almost gonna go to target, baby. Another money zone bounce off the 5 minute. Basically, this is what they did to us up here. They shook us the fuck out of there with the money zone bounce and ramped up. But this time it looks decent. You know, who knows? We got the Bears weak on the 15 minute.
All hostiles retreat. You're bringing your rotating pads.
All right, take profit too, if you want to. Get the hell out of that trade. What would be a good thing to do here? Like, I'm gonna go down to a 2 minute bar by bar this motherfucker. I'm thinking about like just letting them hit the target and getting out of the trade. Right now we're up pretty decent on this trade. We hit target. Oh, almost hit target. We almost hit target. I think 93 is the target there. Oh my God, they got to 91. Fuck it. Hit me at 93 or take it all back. Fucking psycho. Guys, this is definitely a great trade. We went up 3R. Going back. Another money zone wick. Y'all see that? Another money zone wick. So in this case, guys, we played a 15 minutes of demand level, all right? And we got in at the lows as close to that level as possible because that's where we were going to stop out at. And that's the best we can do. In this case, they gave us some chances, right? Like came, moved away from it, double bottom kind of situation. This is a lower low, guys. I know, don't argue with me about that. But basically, once the price crossed above that 50, it was like it was like us assuming that the bears are going to get weak. And this purple tells us that the bears are weak. Green tells us we're accelerating. Dark green are your pullbacks into the money zone. And then it's just, a matter of trying to trade that back to the upside. Now, we've approached the 1 hour target. This shit could die bad, like bad. You saw that first wick that just happened? If you thought that this wick of Maru was something, wait till this guy kicks in, if he kicks in. That's the thing about trading. We don't know. It's all probability. And this is where your guy's gonna friggin' rip us a new one. So it's hitting the 200 moving average up here. Maybe that's a test for another drop. Maybe it's a breakout. If we do, great. If we don't, oh well. But we have a target right here and we're back up after a wick from the money zone. So you just see the same thing happen over and over in this market. It's the trader that I think makes it a challenging, difficult scenario. Boom, we just hit target. Yeah, we close enough. We're about, there we go. All right, trade's done. Congratulations on everyone that fucking took this trade with me and managed to hold through all of that madness that occurred. This is how I would like to start to trade. I'm tired of kind of getting out because I just want to take money out of the market. And now this trade paid way more than I would have lost, 3x. So, it is what it is, guys. Yep, there she goes. She's squeezing through that level now. She's squeezing through that level. Crazy, crazy trade, guys. Amazing reversal trade call out. Look at this thing. Now we're almost up. I now put the trail behind it. So if they come back and hit that stop, then they hit that stop. I'm up maybe 1 more point from it, but I'm trying to see if this momentum squeeze can give me more. It went up to 97. All right, they stopped me out on that pullback. So I got 1 more point than I would have. No big deal there. Probably should have took the high there and just call it a day, but great trade. Congratulations on anyone that took that one. I hope you guys kind of understand the why, so you can do this on your own. Like, I'm not gonna always be in front of the charts. I am gonna always stream, but I want to get away from like being in front of the charts so I could go ahead and live my life. At some point, I'm gonna automate all of this and just kind of call it a day.
I'd probably
Hold on,
buy some
LMD.
on the dip.
YouTube, I am out of that trade. I got stopped out at 94 on once we broke out. We have another 5-minute demand line, supply line coming in, so just watch out. Up here is where you need to be trying to exit because that 1 hour supply zone is not to be messed with. All right, my bad, LMD. Wow. So, I mean, we were trading ES. But look at how NQ perfectly like kind of bounced off of the bottom of the Bollinger Band there on that move, which is at, where demand is at now. This was previous supply demand. It broke through that this morning, came all the way down there, established another demand level, came above, broke down. I mean, it kind of bounced, came back down, made a lower low. Now I'm usually looking to enter on the same play because the 15-minute probably established a play up here on the break of that structure. On the break of that structure. So if we go to charts, look at that. Watch out here. 15 minutes showing a possible reversal, so you might want to get the hell out of your coins, or not. Whatever. Do what you do. I got you up here. So yeah, on NQ, the 15-minute demand line came in a little bit below this level here. So it came in down here. We knew that was the area to potentially take a double bottom after this candle spiked back up. So I'm technically looking for this long. And the reason for that is because this is where your 15 minutes starts to pull back for the double bottom play. So you either take this one for the V shape potential, and then this right here gives you that W bottom kind of loop back to the upside. Now on a trade like this, same target, boom, we broke through it, and then it just stayed above it and ramped up. Now we want to see that bounce off of that and keep just pushing the Bollinger Band to the upside, but the market has basically done what it tends to do, I think. So you got to kind of take that with a grain of salt. All right, so that's what I'm thinking about with NQ, but it's approaching supply levels back up here. The last thing I wanted to say was about confluences, man. This green cloud here, if we go into the macro for ES and NQ, I mean, let's just do it for NQ. I'm pretty sure it's the same. If we go into the macro for NQ, if we like to take money zone entries to the upside on the smaller time frames, and we've seen the statistical probability of that, right? We've seen the statistical probability of taking an entry on the money at the money zone. We may not have it today, but look at the bounce. Like, oh, NQ actually did not bounce off of the money zone. So that's interesting. We do have a supply line coming in. Damn, NQ's about to get shot. But this is what we went for on ES. So on NQ, I would highlight something like all of this right here. And then I would just kind of make sure I know that that zone is something important. And this is how I mark up my charts, guys. Don't necessarily need to see it, just need to know where it's at. And I like the oval shape, so I don't have to keep coming back in there. But that area there is a strong demand zone. So maybe even taking a short back up here and just kind of waiting to see what tomorrow, the next day might bring, might not be a bad idea. Now let's go look at ES, because this was what I wanted to show you guys. All right, so yeah, that bounce zone, that green zone, was basically this entire area on ES, and they moved it up, of course, but that was that. Craziness. Yeah, so that was the idea there. So that's confluence number one. I'm gonna go to the smaller time frame. And the biggest of all confluence, believe it or not. Ooh, another breakout, 197. So it's just grinding now, right? It's just kind of giving you the close higher than the previous candle situation as it's pushing up there. I think you guys I never really, kind of showed you guys what to look for up here. But I would definitely exit this trade, guys. This is not going to be pretty when they kick that ass. Let's see.
You're losing his back. Hold your territory.
I'm trying, bro. I'm just trying to, also. So right up here where, you kind of don't really see my mouse, but yo, you know what? That's what I'm gonna do. Instead of bullshit, I'm gonna try to find a pointer that works for this. started moving like that.
The Russians have to be here.
There's no reason to leave. I want to say that like not leaving until we hit this stop out is kind of a good idea to do once we kind of hit target, because you know we would have probably lost a little bit from target, maybe a lot more there, but it would have been a green trade regardless, and now we're still in on this move up. So like I want to say that this 5 minute 50 Hall moving average could act as your guide on this trade on to both sides. Once you kind of got through this, you're chilling, came back, wicked it, chilling, exit. So it becomes like a really self-fulfilling prophecy if you could just kind of hold your coins until they really violate that line, or you know, until you're ready to kind of like leave the trade. But generally, if you enter down here and this bounce comes in, that's a nasty one to get you out of there. But you know, it serves as a pretty good area to kind of hold your coins until. Yeah, it's getting real heavy up there, guys.
Comes blackout on the way.
Right. Sorry, I'm doing a million things at once.
you walked me through on like how to do it and stuff like that. So yeah. But I was
What time is it where you at?
right now it's 1:20 right now. So I think we got like 1 hour,
Let's
41
say,
minutes before the market closes.
Yeah, say 2 o'clock. 2 o'clock your time. It'll be 3 o'clock my time.
All right, no problem.
I'll be there.
Thanks.
Lou,
All right, check it out.
What's up, brother?
What's going on, Spug? How you doing?
Not much, bro. Pretty much done for the day. Caught the
That's what's up. Hopefully it was a green day, man.
Amazing, bro. Caught the nice bounce just now.
Okay.
Held that bad boy to target.
Okay, that's good, man.
Yeah, look at Apple right back where you left it, man.
I know. It looks strong, right?
Yeah.
I think it bounced off the pre-market high. I'm looking at it right now. Came back all the way to pre-market high and went back up, man. That boy is strong.
Yeah.
That boy is really, really strong.
We talked.
But yeah, I just took only those 3 trades, and I'm like, you know what? I'm gonna just wait to getting close to the market close. I just sold LMD, and hopefully if you're around too, I'm thinking about playing an earning play for either DG or Billy. So hopefully before the market closed, though.
Yeah.
Yeah.
What's
They happen the same day? Do they happen like the same day every quarter?
No, sometimes it changes. Because last year I remember Amazon and Apple was same day, but this year, last quarter prior to this last quarter, 2 quarters ago, I remember Apple and Amazon earning was the same day, but this previous quarter was different. So I think sometimes it changes.
Okay, I got it.
Yeah, but usually they're around like the same month, but probably different days apart.
Yeah, and I guess you could probably, if you know which month they have their earnings in, and you can kind of look, because I think it'll probably be good to look like maybe at the last couple of earnings that they had, and kind of see what the range is.
Yeah, I think I sent a picture in a trade idea, like it shows, like the picture I sent shows like usually the range they usually goes from like previous earning within like the last 20 years, within like the last 5 years. So yeah, I'm once I get back my computer, I'll definitely look at both and look at the main one I'm really thinking about. But the only problem with DG is it looked like the volume is usually low, so I don't even know yet. But once you get back to the computer, it's something we all can just look together and see if it's worth taking or not.
What's DG?
All right, sounds good. Well, yeah, I should be back to the house by 3 o'clock my time, 2 o'clock your time.
All right. DG is Dollar General. I think they have running tomorrow too. LMB.
Ooh, look at this thing.
All right, Dave.
Earnings is tomorrow or tonight?
Tomorrow morning.
Yeah, I see now. This thing is holding this little area right here.
What you looking at?
Dollar General.
Oh yeah. Boy, you see the price though? That boy's got range. But like I say, it's just the volume. It's just hopefully volumes come in. And Billy's has been trending down all morning, so I don't even know, man. I might probably try to do it your way, the way you said, like kind of go both ways. But like I said, it's just to see how it is, so it's not a big deal. I won't even be risking that much anyway, just to see, like, you never know, right?
Yeah, cheat both ways. You can't go wrong.
Yeah, you see? Yeah, you never know.
Yeah, that's my shit, man. I just go cheat both ways, because, earnings are lottos.
I'm going to do the same.
Billy. This is like the Amazon of China, Asia?
Yep, of China. Chinese company.
Damn, this thing is like at 15. I'll buy this just for the long term.
Hey, I used to trade Billy back in the day. It used to have good range during the day. Billy and Baba trade both of those.
Yeah, I like Baba a lot. This thing's just falling off the bone though, man. This thing could go back to $8. That's the macro double bottom area. The high was 157 back in 2020.
That Baba?
Yeah, no, Billy. High
Really? What is it at now?
$20, $15. High of 150 back in 2020. Just kept falling and falling and falling. It's below.
Yeah, that's back when I was trading it, because I thought it was like in the hundreds.
Yeah, not anymore. That's the thing about these stocks, man. It's put you in a gulag for a long time if you buy high. You never know what high is sometimes. Yeah, we shall see. I like Baba for a possible reversal pivot to the upside.
We're shipping you out to Doha, Qatar. Extreme conditions have caused a massive accumulation.
I get out of this Apple play, I'll probably look at some more swings. I don't like to be in more than like 2 or 3, so I'm in Apple and SPY right now. Close Apple out for a nice green trade. Look at taking something else.
So if we were to do the same thing that we did down there to take this move back down, all we're waiting for is this confirmation on the 15 minute to give us the go signal. So like it might be a little bit too late, but basically we are not getting in front of this bullish move to the upside is the idea. And we want price to kind of break through that level, but you know, without that line, we basically want price to get underneath the 50 HMA, that green line that is supporting the price action right now to the upside. All it did is consolidate right into it, and you're going to get a snap or a bounce. Crack, snackle, pop. Or snap, crackle, bounce, rejection. But if you wanted to take this level up here, you know, kind of gunning it, risking the previous swing high, shit, ain't nothing wrong with that. Truck, bro. These fucking trucks. There's no way to hit these trucks if you ain't got no kind of demand, bro.
Interested in me.
All right, what's up, guys? Looks like we're underneath the 50 HMA here, kind of condition down here. We could go back up and retest, so I'm gonna wait for that. But basically, we do have the condition to go short here now. So the reversal trade would be you stopping out if they swung back up there. So let's see if we can get a move back to the upside to take that. But I'm not trying to take it right here. Oh, you lost them. It's all good, guys. We could wait for a double top of this line and then take it. If not, then it's just gonna go ahead without us. But this could be nasty, nasty, nasty. Oh! Oh! Chew, 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 chew. Damn, that shit went right too. So the bottom of the Bollinger Band right now is where this thing is going to catch smoke, is what we anticipate. If not, then this thing is just gonna collapse. Not a bad trade there for a quick reaction. If they hold that, then this shit is sick. Start a family, baby. Someone who truly understands how to treat a man. This is what I need. Wow, wow. Somebody stop the press. Doesn't look like we're gonna get that double top kind of move that we want, but that shit was a crazy move. Crazy move. I was thinking about going long, right? And the reason is because the super trend stops at 8.6. 8.6 is right there. Why is that a fucking level that's important on the super trend? All right. And if you want to step, you got to play it by the rules. Do what I do. When I do what I do. Come on. Step to the left, step to the right, ring around and bring it down tonight. Moving on up, moving close. Let me see you. Left to the left, left to the right. If that 1 hour kicks in, guys, it's gonna be bad. Keep on stepping. So at a level, you want evidence, right? At a level, this was this morning's evidence, I believe, 7:30, 8:30. This is this morning's evidence for the shorts. See, it's not always clean. I need everywhere. Like, it's craziness. Whoa, 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 yeah. Oh yeah. Whoa. Oh now, what do we do when we all dressed up and in the mood? To what? All right, we got defeated. That's cool. Ugh, I'm tired.
you want to have a sexy body? If yes,
channel. I'm going to head out. We can see that, you know, you can either take this trade to the downside from this channel here, but from this supply line there. However, there is a 5 minute, like it hit target. So everything after that is kind of just like this move that you want. This move right here. Okay. So once you hit target, boop, you get this bullshit consolidation, boop, boop. You want all of this. You want them to push that Bollinger Band down. So your move should, you know, kind of start forming somewhere there. And you kind of have to just defend against an upside move, or maybe they hit you with a double top before they send it down to hell. Who knows? But profit taking is definitely okay at key levels. Unless you're gun-hoing it like me and you're going for a 2 to 3R, and it is what it is. But I'm pretty sure when I called this out, it was way back after the first wick. So after that wick, when we went back up here, I told you can take it even though it didn't quite form on the 15 and potentially ride that move to the downside, see if they continue to defend this level. In any case, that would have been something like that, giving you 1R, 2R, maybe this is a 3R trade. Who knows? And maybe you just, you know, can go for more. But I'm gonna shut it down because I want to work on a few Python scripts for the OBS platform, and I have to like reboot to see if that works. But till next time, till tomorrow, we will be here again to do this over and over and over. Longs got stopped. Oh no, this is the ES long trade. This was nice. That should have paid out. This would have been fucking phenomenal. That to the upside, even more phenomenal. I'm thinking, man, I gotta just play some ES trades and bank out, bro. Like, ball the book out. Let me just calculate real quick how much that would have been. So if I took supply up there on ES, let's just say where I got out. ES Globex. So I know what the up move was. It's like 2 and change. This move here is a 203 move with a 206 stop. It's at 42, 206 with one contract. Calculate. So this is a bearish move. So if we would have done this trade, we would have lost $150 entering here and letting them stop us out at 206. Okay, and the potential for the downside move after taking this supply line was, let's just call it 4177. 4177. Calculate that, $1,300. Now the upside move that I called out, so that's 275 on the upside move, 1,000 and change to the downside move. So we're looking at like almost 1,600. Let's just call it. From here, 177 is the entry now. 4177, and we took that. I took it to 94, 4194. 41 at 94. Calculate that. That was a bullish move. $850 to the upside, risking for 174. $150, bro. I need to be risking $150 on these trades, which is about 4 points, and making fucking that much on the other side. Oh God. And just now we called out the shorts, right? Let's just say we got in at 4195. 4195. So far we made $2,000 today just riding the shit out of this market. It was what, 4,300. And then to the downside, no, $2,300. I don't know what I'm talking about. Riding into the downside bottom of the target, I got out 4189. 41.94 for 189, and this was a bearish play. Another 250, and what would we lose? We would have lost, let's just say 4,200. 250 versus $300. That's not good. 41.94 is down here. So this was the entry on that to lose 4,200. Yeah, so it would have been a $300 loss for a possible, for 189. 250. So we had close to 1R on this trade to the downside, with the risk being way too good for my like comfort. So I would have had to have gotten in somewhere up here a little bit higher. Maybe instead of 300 points, it's 2 more is 6, right? Yeah. So somewhere up here would have been like your actual entry to take the move back down. And again, you gotta like kind of just snipe that shit, snipe, or somewhere right here for that up move. Money, bro. That shit is crazy. Crazy shit, crazy. And the snap happens after we cross that 50, so you don't even have to FOMO, all right? And even now, if you got out right now for 192, you still up. Still up $100 to get the fuck out of there, right? Because you see it could potentially go up, but we can't trade like that. We have to take that move back down and see what happens. But anyways, it would have been almost a $2,500 day if I just traded one NQ ES contract. And my entries posed, some hairs, right? Like this, I shit, came right back up. It was not easy. Anywho, hope you guys find value in that. I'm gonna head out now. I like this 30. It doesn't really cloud anything. why is it like, I can definitely change that. I can change that. You sell into blue, buy into purple, ignore the blues above that. I mean, this is your ideal condition, right? Like, there would be no blues here, there would be no blues there, and they go straight into red. From purple, there's no cyan. This would trigger a sell, that would trigger your buy, but that shouldn't be there because it's underneath. I mean, this shit is chopped, so I mean, who the fuck knows? But this would be a sell, sell, buy, sell, buy, sell, buy, sell. Yeah, it's just fucking lunatic. It's ludicrous, bro. Let's look into that one more time and see something. That white candle's not good. All right, so we got the bounce off the bottom of the Bollinger Band. Now you want to see them push that up for the shorts. That should be a stop out kind of scenario if they take you out, but